Let's focus now on the Canadian dollar. Of course, when our currency goes down, it can be great for exporters in this country, including oil producers. They like a low Canadian dollar because their product is priced in US funds. We're joined now by Shaun Osborne, Managing Director and Chief FX Strategist at Scotiabank. Fascinating times because we've got you guys think that the Bank of Canada will increase again next month.
Correct.
But you also think that the Fed will skip an interest rate increase on balance of probabilities.
Yeah.
And so that sounds bullish for the Canadian dollar.
I think more generally bearish for the US dollar. It's going to be a case, I think, of from our point of view, the Fed is close to being done. There's a risk of one more rate hike potentially from the Fed, but our call has been for quite some time that 5.25 will be the peak for the Fed. On the other hand, we've got central banks, not just in Canada, but in Europe, Bank of England, the European Central Bank, potentially even the Bank of Japan, looking to adjust monetary policy further in June. So that, I think, potentially is more supportive for the currencies, more negative for the US dollar as we look into the middle of the year.
Maybe we could put up a 5-year for the US dollar. Well, there's the Canadian dollar. So we are down. We're less than 74 cents. The last time we were up around 80 cents, I believe, was in March of 2022.
Right. So it's been a long-term correction. The Canadian dollar was very soft during COVID. We had a significant rebound. Subsequent to that, we've really just sat in a trading range for the past 7 or 8 months, somewhere between sort of 72 cents, 75 cents, and hasn't really shown a lot of interest in moving out of that range at this point. Commodity prices are a little bit soft. There's obviously been a lot of focus on monetary policy, whether the Bank of Canada was done or not, with the hikes that we've had in from the bank domestically. So there's been very little incentive, I think, for investors to really take a positive view of the Canadian dollar. And in fact, from positioning and a sentiment perspective, we can see that investors generally are still quite negative on the Canadian dollar. Position has been quite bearish over the past few months. We saw another big increase in net Canadian dollar shorts on the IMM data through last Friday. So that does suggest that there's still an underlying sort of pervasive negative view on the CAD amongst investors, maybe related to the economy, interest rate increases, worries about the housing sector. We think that's overblown. We think the Canadian dollar actually offers pretty good value at these levels. I
suppose international investors see these headlines, Canadian households among the most debt burdened in the world.
Yeah. And so clearly higher interest rates in that environment is not going to be good news necessarily for the economy. As regards the housing sector more generally, I think from our point of view, we see a lot of structural strength in the Canadian housing market. Very high immigration, relatively short supply of housing across the country. There's no data thus far that suggests that there's any particular stress emerging in the housing sector. Mortgage arrears are very low. So from our point of view, although it's a concern that we should be wary of, it's nothing, I think, that is detrimental to the Canadian dollar outlook at this point.
We did hear from Rob McLister, the mortgage expert, last week, that his read is, though, that quite a few households are going to non-prime lenders to renew their housing loan because they just can't pass the stress test at banks.
Yeah, that's possible. I think of the households that are going to be affected by this, it's probably a pretty small cohort. When we look across the Canadian economy, generally, we have a high proportion of renters who are not affected directly by higher mortgage interest rates. Clearly, higher rents are emerging. A significant proportion, roughly 30% of households, don't have a mortgage at all.
Yeah.
And of that proportion of households that do have a mortgage, that cohort that is sort of resorting to say less stringent benchmarks is pretty small. So although that's probably a factor that we need to keep an eye on, as I say, at this point, we don't think it's necessarily a significant concern for the CAD outlook.
It always seems so paradoxical, doesn't it, that high interest rates in the short term boost a currency, but usually interest rates are pushed up because inflation is high, and that means your currency is depreciating.
Right. So you're compensating investors for the risk of inflation, in a sense. I think that has been the key driver of currency movements over the past few months. So the dollar has benefited from a quite aggressive Federal Reserve.
The US dollar has.
The US dollar, correct, yes. Sorry. The US dollar has benefited from a more aggressive monetary policy from the Federal Reserve. The Fed was one of the first central banks to start raising interest rates. We think it's probably going to be amongst the first to stop raising interest rates.
Let's put up that 5-year chart for the dollar index. Sorry, Shaun,
right,
carry on. Yeah, please.
And so we think the general view here is peak inflation, peak Fed, peak US dollar from our perspective. So the general outlook for the US dollar is geared towards, I think, softness as we look into the second half of the year in particular.
We keep hearing, is it $30 trillion America owes now? And of course, they have a vast economy. But is there a real risk the US dollar loses credibility in years to come as a reserve currency?
There's been a lot of focus on this over the last few months, the de-dollarization idea. And certainly when you look at the numbers, there has been a shift away from US dollars in terms of reserves held by central banks. That reflects geopolitics, sanctions, a desire to be less exposed to the US dollar by the likes of Russia and China, other central banks. So there certainly has been a move away from the US dollar. But I think, on the one hand, I think the polarization of US politics is something that does represent a bit of a challenge for the outlook for the US dollar. I think it does undermine the sort of continuity, reliability of US politics on a go-forward basis. But on the other hand, it's very difficult for other currencies to challenge the dollar's liquidity, convertibility, and overall dominance in financial markets at the moment. So although we may see some challenges emerge going forward, there's no real obvious challenger at the moment. The yuan is not fully convertible, for example. Euro is a potential rival, but still relatively young. And I think over a time frame that's relevant for us in this discussion, the dollar remains most likely the most dominant currency in the global financial architecture.
Is it still true that Canadian dollar is seen as a petro-currency?
I don't like the term petrocurrency because I think there's a lot more going on in Canada than just oil. But the reality is we are a resource-based economy. Commodities do exert an awful lot of influence over the CAD's performance. And one of the headwinds, I think, for the Canadian dollar recently has been the softness in commodity prices. We've seen a roughly 50% decline in commodity prices over the past few months relative to that rebound that we saw as we emerged from COVID. The Chinese economy has not been recovering as quickly as investors had hoped. That's put the skids under industrial commodities, copper, iron ore, coal prices have been particularly weak over the past few months. So that has been a challenge for the CAD. But when we look at interest rate differentials, they have started to narrow in the CAD's favour relative to the US dollar. We're still trading at a slight discount at the short end of the curve, so a premium for US yields over Canadian yields. But that differential has narrowed. It might narrow a little bit more, and I think if we see that, we could see the Canadian dollar pick up a little bit more ground. In conjunction with a weaker dollar generally over the second half of the year, we think there's potential for the CAD to rally a bit more, maybe 76, 77 cents into year end.
Okay, well, that would be, because I don't think we've been 76. Well, I guess in January we got north of 75.
Yeah. So that's pushing the top end of the range for the Canadian dollar that we've seen recently.
Shaun, thank you very much.